Hi traders, welcome to my YouTube channel Forex Tips. Hi traders, now we're going to discuss the basics of the market structure. The first one is the expansion. Expansion occurs when there is an impulse movement towards a direction, whereas retracement is the correction movement after an impulse movement in the market. Both are in opposite direction. As you can see in the diagram, uptrend and downtrend movement of the market. In an uptrend, the market is making higher highs and higher lows. In downtrend, market is making lower highs and lower lows. Expansion and retracement are shown in both of the cases with letter E and letter R. You can see the live example from the market. Both downtrend and uptrend are shown with black line. And expansion and retracement you can see with letter E and R in both cases. So market makes expansion and retracement in a downtrend and in an uptrend in both cases. This is the live example from the market. If we apply Fibonacci retracement, and you can see that market is in a downtrend and making 3 expansion towards downside and 2 retracement to the upward direction. Fibonacci will be used 100 level at the left top and 0 level at the first low of the market. BMS, break in the market structures. Break in the market structures occurs when the price closes above or below a swing high or a swing low. Generally, every trader should trade in the direction of the higher time frame when BMS takes place. So, after BMS, always wait for retracement and then take the trade in the direction of BMS. In this live example, market is moving on the left hand side from A to B in a downtrend and from B to C in an uptrend. And you can see the BMS written, that is break in the market structure. So OTE are the places where you can place the sell trade and buy trade according to the trend. Range high and range low. After every break in the market structure, there will always be the formation of a new consolidation that is called range high and range low. Now you must trade in the direction of break in the market structure. After BMS, wait for retracement to 50% or OTE, opportunity time of entry of Fibonacci levels. Here you can see that after BMS, market makes a range low and then market makes a range high. After a range high, then you can take the trade at OTE, that is the low risky buy. Same on the right hand side in the bearish market, OTE is a low risk sell. So between range high and range low, you can take the buy and sell trade. This is the live example in the market. You can see that after the first break in the market structure, the market is making range high and then range low. After range low, it retraces back to another range high. From there, you can take the first sell trade where it is written OTE. In the same manner, in an uptrend between range high and range low at a suitable level, you can place the buy trade accordingly. Failure swing, that is short market structure. When there is an uptrend market and the price fails to break the last top and last swing high and breaks the previous bottom or swing low, then we can say that an SMS is considered to have occurred. Same is valid in the bearish trend. You can see the market was first bullish. After the break in the market structures, market make the third break in the market structure. After that, where SMS is written, that means the market fails to break the last top or swing high. That means the now market is changing the direction from bullish to bearish. At any appropriate level, you can place the sell trade. In this live example, you can see the market was first bullish, and after that, it makes a low where second BMS is written. After that low, the market tries to move up but could not break the previous swing high or top. So that means the market is changing the direction. So after that, at any suitable level, trader can enter for sell trade. Whenever we look at any price on the chart in MT4 and MT5, so we can see that price can simply be found in one of the three phases. Either the price is in a consolidation, or in an uptrend, or in a downtrend. So always the price would be in one of the three phases as I have mentioned. Market structure in bullish conditions. Now, the bullish market is characterized by making higher highs and higher lows. But this characterization is not enough. It is necessary to say that the bullish market are always breaking swing highs and respecting swing lows in all cases. Then we can say that the market structure is in bullish condition. In this example, you can see that there is a bullish trend in the market, and the break of market structures always breaks the swing highs, and market is not breaking the swing lows. That means the market is in a bullish trend. At OTE, you can suitably take the buy trade with low risk. This is live example of the market in which the market is in an uptrend and it is breaking structure in the uptrend, and always it's breaking swing highs, but the market is not breaking swing lows. That means the market is respecting swing lows, so we can say that market is in a perfectly in a bullish condition. Liquidity. The Forex market is zero sum game, which means that for a trader or institution to buy or sell one currency pair, it is necessary that there is another trader or institution with an opposite position. It means if smart money or banks they want to buy a currency pair, they will need seller in the market. So the existing facility to place these position in the market is called liquidity. The liquidity is defined by the stop losses. Where the stop losses exist is where the liquidity exists. Smart money banks they need to activate the stop losses of existing orders in the market so that they can place their position in the market. So this is also called liquidity grab, which makes the market move. Buy stops liquidity, BSL. The BSL is originated by stop losses of sell orders. After the BSL is taken, the market makers they make the market to reverse to the downside because banks use the BSL to place their sell orders in the market. Now we are going to discuss the important points where the BSL takes place. First one is the previous month high, the previous week high, previous day high, high of the day, old high or any swing high, and equal highs. These are the important points where the market makers they manipulate the prices in a manner to hit the stop losses of the sell orders. In this chart, it is shown that the market is breaking the previous month high and hitting all the stop losses of the retail traders placed at that level. We can say that BSL is taken, and after the BSL, market reverses to the downside with a strong bearish candle. Now we can discuss some other examples of like previous week high. In this case, the market breaks the previous week high, hit the stop losses of the sell orders, and reverses to the downside. So market behavior is to change the direction after the BSL. Next, we will take the example of previous day high. In this case, you can see that market breaks the previous day high, and after that it changes the direction to the downside. So after every BSL, the market grabs the liquidity of the retail traders by hitting their stop loss orders and changes the direction from bullish to the bearish. High of the day. When the market start in the morning, so it first establish a high. After few hours, market again reverses to the same high, breaks the high and knock all the retail traders sell orders, and after that market reverses to the downside. So whenever market takes the stop orders, it changes the direction. In this case, there the market was previously hitting the previous highs but not crossing it. But after few hours, the market moves to the previous high, equal highs, goes above some pips, and then reverses the direction after hitting stop losses of all retail traders. In this way, market grabs liquidity. Sell stops liquidity. SSL. The SSL is originated by stop losses of buy orders. After the SSL is taken, the market reverts to the upside because the banks use the SSL to place their buy orders in the market. So by hitting the stop losses of buy orders, the market moves in the bullish direction in uptrend by grabbing the liquidity. Now we will discuss the important places, important levels where the SSL is taken place. The important levels are previous month low, previous week low, previous day low, low of the same day, or low or swing low, and equal lows, that is the retail support at that levels. In this example, you can see that the market was going near to the equal lows but not breaking it. But after few hours of consolidation, market manipulate towards the equal lows, goes beyond few pips, and after hitting the stop losses of the buy orders played at that level, the market reverses to the upside. In this example, you can see that the market breaks below the previous month low. After going few pips below the previous month low, market direction reverses to the upside because all the stop orders, buy order placed at that places, their stop loss are hit. So market grabbed the money, grabbed the liquidity and moved in the upward direction. In this example, you can see that the market breaks the previous day low, and after going a few pips below the previous day low, then market changes the direction to the upside after hitting the stop losses of all the buy orders placed at that level. So these are the important levels where the SSL is taken place. Next, we will take the example of the same day. After the start of the market in the morning, market makes a low, and after few hours of consolidation, market again comes back to the same low, crosses this low, hitting the stop losses of the buy orders, and then reverses to the upside with momentum. So in this manner, the market makers, they grab the liquidity and make the market move in the upward direction. In this example, you can see that the market makers, they goes below the old low or swing low, and after hitting all the stop losses the buy of the retail traders who has placed the buy orders at that level, the market reverses to the upside and changes direction from bearish to the bullish. Now we'll discuss the case in which the market has equal lows. So market after consolidations goes below the equal lows where all the retail traders, they have placed their buy orders, so their stop loss are hit, and after these stop loss are hit, market moves upward in upward direction with lot of momentum.